It was the biggest interest rate hike in nearly 30 years. So what does that mean for you? Our Nixon Norman got some advice from a financial expert.
With the Fed increasing the federal interest rate, you may be wondering, how will this impact my everyday life?
First of all, it means that borrowing is going to be more expensive, right? So loans you would have taken out, mortgage rates, auto loans, loans to buy appliances, whatever, credit card rates. We should see all those things start to rise now that the Federal Reserve has raised its target interest rate.
Although a number of negatives come with this increased interest rate, there are positives as well.
Now, on the flip side, this also means that we should be seeing our savings account interest rates ticking up as well.
And as for those big ticket items, Dr. Orman suggests,
so if you can defer a purchase, if you can just stay where you're at, keep fixing the old car, stay in the old house. If you can do that, that's fine. Do that and wait it out. Otherwise, if you really do need to make one of these purchases, do it now.
This is because although rates are already high, they're expected to bump up even more.
There's more coming this year. They've also announced that there's probably going to be a couple more next year. So, that announcement has happened. So we know this is not as high as they're going to get. They're going to get higher than this.
But again, back to those positives I mentioned earlier.
Actually, when the market is down, if you're investing for the long term, this is an opportunity to buy stocks that otherwise you might not have been able to afford.
As for seeing a recession, of course, there's always a possibility that we may get to that point. But in the long run, these interest rates are being put in place to slow down the current inflation that we're seeing.
The Federal Reserve's own forecast says they think that economic growth will slow down, but not turn negative.
Nixon Norman, Fox 54 News.